Hi everyone, welcome back to Beerich Podcast. This is a Q&A session. The first question I have taken is regarding balance sheet. In many of the videos, the viewers are continuously asking about balance sheet, and particularly a person called Dinesh is posting in almost every video. So,
well, I understand.
in Beerich and
MoneyPechu
no,
I understand. Yeah, I understand. We did do some videos on balance sheets long time ago. So I'm working on another video where I'm actually trying to take it to a practical level, where I'm sharing my screen and we go into screener and we're talking about how we look at basic.
Which company have chosen in that?
I forget which one I've chosen. I think
Okay.
it was ITC, one of those companies. We're taking a small cap actually, not ITC. So you see it. And we'll talk in great detail about how Albin and me use screener just to do some basic evaluation in terms of balance sheet,
Okay.
do stock analysis before we take it to Anand and say maybe we can look at this deep dive. Because before we take to Anand, we have to do some basic analysis.
Okay.
And that video will be coming soon, where I'll walk through what all we look at in a balance sheet as an investor, what are the important metrics you should study, and where you can find all this information, and how you can look at it, and how you should evaluate it. We'll walk through it. I mean, on this kind of a podcast, I can't talk about it in great depth because that video itself will run for a long time. So that video will come out separately on MoneyPechu. I try to talk in Tamil, so it relates. More people can watch it to a wider audience. Though my Tamil is not great, so you can criticize me on that video.
Okay, the results will be declared half-yearly, quarterly, and annual. For every result, it should be published, or
yeah, it's published. It's published quarterly. Every quarter results are there.
Okay.
Then you can combine it quarter-wise, and you can get yourself half-yearly. If you want to combine it for a full year, you can combine it for a full year. But those results analysis for the way we do investing long term and all that, we look at only yearly results.
Okay.
And we try to look at results over a period of 3, 4, 5 years. So when you look at it like that, quarterly results really don't hold too much worry for us. That is more for people who are in the FIIs and DIIs who worry more about quarterly results because they look at price fluctuations in a short term. They're looking earnings in a short term. We are looking at value investors. We look at long term.
Okay.
So we look at trends over a long period of time, and we look at projections over a long period of time. So we're worrying about a short term, quarter. It's not something to worry about. Let's say ITC does poorly in one quarter. If anything, it only gives us a buying opportunity. Let's say ITC does poorly in a quarter, and the next few quarters are expected to be poor, and FIs decide to pull out of that, and the price corrects by 5-6%. It's an opportunity for you to buy. Other than that, as a value investor, you cannot make an investment based on just on a quarterly result or worry about your investment on a quarterly basis. Okay. Then if you're worrying about that, then you're making the wrong investment. You need to do further study before you invest again.
Okay. So this question is from Ayan Prabhu. He has asked, hi, is it possible to open a demat account from Australia? I have NRO and NRE account.
Yes, it's very much possible to open an demat account sitting in Australia. I've actually done a video in depth about this where I've talked about how to open it, how you come back to India after 6 months when you become an NRE, how to open an NRO account, how do you have to declare it to the bank.
Okay.
I've even in that video spoken about if you already were in India and you had a demat account, when you left India, what happens to that demat account, how you need to declare it, what you need to do, how you need to move money into India to buy, which account, NRE account, NRO account, which one do you move money into, and based on which account you move money into, if you can pull that money out of India, if you cannot take that money out of India, what are the tax rules for each one. I've spoken in great detail in a video. I think it's there on Beerich. I spoke this video specifically when it came to investing in the Japanese stock. Around that time is when I spoke about this. So I'm sure if you dig up in the history in Beerich, it's there, Ayan Prabhu. So I suggest you do a little bit of digging. Otherwise, Arun is feeling enthusiastic and he has some time to spare while editing this video.
No, I'll place it in the description.
Sure.
Okay. So the next question is, I recently heard about Senior Citizen Savings Scheme, which gives around 8.2% interest per annum. Is it a good investment scheme?
This one. What do you think? Is it a good investment scheme? You tell me. At 9%, 10% is our actual inflation. And your investment is growing at 8.2%. Is it a good investment?
No, firstly, I'm confused with this scheme because there is FD and other savings scheme already present. So why is that it is particularly for senior citizens?
I don't care about all it. The way I look at it is, that's all just names,
Okay.
right? At worst case scenario or the best case scenario, at that 8.2%, you might save some tax. They may not take tax on the money you make, interest you make. While in the other, they might grab tax also on top of it. So let's say they don't take any tax and you're getting it 8.2% per annum they're giving you. And inflation is at 9%, 10%. Is it a good investment?
No.
There.
Okay.
So why do you care? They can call it senior, they can call it junior, they can call it special for women. All that matters is how much you're going to pay me.
Okay. How much the tax is going to be deducted and how much.
Even if you don't, they'll argue right away, no tax will be deducted. Okay, no tax will be deducted. They'll say, but if you sell capital gain tax, they'll put okay. But everything net. My point is, your investment should beat inflation.
Okay.
If it's not beating inflation, you're not investing. You might as well buy gold.
Some people may buy this for pension also.
You might as well buy gold.
Okay.
Because gold at least might not be giving you returns, but at least you don't lose value. For this money you're putting in senior citizen saving scheme, you put the same thing buying milligrams of gold, buy ETF.
Okay.
They would buy 1 rupee, 2 rupee. I told you this.
Yeah.
So you'll say, sir, I don't have so much money to buy gold. Gold is so expensive. Okay, I'm not saying buy physical gold.
Okay.
Buy electronic gold. Buy gold bees. There's so many ways to buy gold now. It's not like when I was a child, there was no other opportunity but to buy physical gold. Then you have to store it. You have to have locker. All that hassle is not there, no. Chili's 2447. Nice name though. And if you want to invest, make sure the investment is beating inflation at least.
Okay.
I'm not beating around the bush. Though many of you accuse me, Vinod sir talks about Madurai, Trichy, Tirunelveli, then when he comes back to Chennai. I'm telling you, buy gold. You have money to invest and it's very little money and you cannot put it in anything and you don't want to open a demat account. You don't trust the market. The market gives you gambling fear.
Okay.
And you want safe. See, senior citizen scheme sounds very safe. The name itself is very safe. Instead of buy gold.
Okay.
If you don't believe in gold, then you can't buy anything.
So this session might have helped with the person who has asked the question. So please keep posting the comments and we'll answer them in the upcoming videos. So if you have found this video informative and interesting, please like and share it with your friends and subscribe to this channel for more videos. See you in another episode.
Thank you.